Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the Australian dollar and many markets were in a volatile whipsaw price action, with the market descending through the 68.70 support, which is given some concern now that we may be seeing a further bearish outcome for the Australian dollar. It is assessed that we could be looking down towards the level around 66.5 to 66.90 as a potential target, with immediate call to 68.20 as the first challenge. In light of the pattern, though, the market is a little bit in terms of displaying bullish divergence. So although the call may be very much a choppy price action, could reach and then rebound in somewhat an aggressive manner. Overall, though, the dollar index, which measures the greenback strength against a basket of 6 major currencies, refreshes its 20-year highs around 104.90. This in terms have seen the euro plummet through the level of 104.85 and reaches its objective, which was seen at 103.40.60, with the low being around that level. In light of the pattern, though, the market still may be in terms of weakness to continue and could look towards now 102.50. The dollar yen story was also rather negative as the market crushed the level of 129.30 on Thursday and plummeted to its objective, which was seen at 127.45. And from there, it did see rather sharply a rebound to much profit taking likely to emerge. The market's still a little bit nervous in being short, as we have seen many times the sell-off being snapped up by the bulls. Nevertheless, with the downside respected, that was at 127.45, could be seen a move back to where that break level was at 129.30.40 and reassess from there. The pound, although posting a relatively weak close, the market is still holding just above that key level, which is seen around 121.70.75. I have mentioned there's many divergences in these markets, and coming to the bullish case, you can see here that the pound is still from a low and a fresh low, and indicators, both MACD and RSI, a low and a fresh high, does eventually support a case for a market to snap to the upside, and therefore look towards 122.45 to 123 to 123.90. As long as 121.70 holds, I'm viewing that the bullish divergence will emerge. It was very whippy for sterling Kiwi, as you can see here, as the market recaptures that 195 level after rebounding off 193. A little bit mixed in the indicators. Nevertheless, I feel the market above 195 will struggle. And if we do see a bounce, that is in the sterling, could see this market eventually pull back, with the Kiwi still a little bit likely to firm up as well. The downtrend in gold clearly seen, and the call to the downside was met after the call has been for some time at 1,820. Well, the market overnight got to 1,810 and it's now hovering around 1,820. Keep an eye on this candle. If it ends up being a hammer, or to the fact a dragonfly doji, could see a rebound, and that is towards the region of 1,850. Wrapping up with oil, well, the market rejected that downside level and once again is close to the top side of the range. In light of the pattern here, although 104.15.45 has been breached, the next level is seen around 106.50. Technicals are still weak, so therefore I feel the market should fail anywhere where above that, around that level, and then see a pullback towards 102 and reassess from there. That wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report and the end of the day wrap.